Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro still close up here in these upper levels. As I mentioned, I was surprised that we had not even corrected back further. We're going to take a little bit look at it here on a daily. But you can see yesterday we even pushed up here above 18, taking out resistance. The resistance level, pushing up just above what we had our own bias chart resistance, which was 1845 before pairing back here. Go on and let's try to pull up the bias chart. Hang on. But once again, like I said, we made this push higher. Although, you know what, looking at some of the other pairs, and I'll just go on and touch base real quick. It does appear that the Aussie dollars began to, I wouldn't say, reverse it, but it is beginning to lose its upside momentum. You can see here, we're just basically spinning tires here, making some up moves, but we close here. We make some up moves, but we close down here. We made a dip, we came back, so to its credit, but we make another up move again, we close back lower, albeit in a relatively tighter range, but nonetheless it appears to be losing its upside momentum. Isn't yet reversing, but it appears to be doing that. Now, dollar yen has kept its upside. One of the things that we talked about, which was when it was at 647, was that the 10-year yields were moving higher at that time, and said, hey, look, now it looks like it's ready for a breakout. Now that's when it hit that area and quickly jumped to 658, and by the later on in the day it was like at 670, and it kind of stalled. It didn't move a whole lot, and then finally started pushing higher. And 2 days ago we had a resistance at 702. It hit 702. We extended that, but didn't go too much further beyond that, although tested a little bit lower side. We're still hanging around this level here in the dollar yen. Now we'll go and take a look here with the equities. And Mark says, can you please take a look at the Dow? Yes, sure, I'll be glad to, Mark. So you can see we made this, we still extended further. And actually yesterday on the position I had from the day before, I ended up getting stopped out, but I came in and caught a few more times from scalps, trying to make up for the loss I had on that. But I still think that when you look at the equities in themselves, and you can look here and say, wow, it looks like it's still going to push to all-time highs. And here we were yesterday. We ratcheted up here. I'm glad I actually got stopped out. The only time it's frustrating me was when I get, it's really not happy about it, when I get stopped out, as if that's the high, and then it turns around and reverses. And that's happened, I guess, to all of us on different times, but it's happened to me several times. But we did go in and push even higher. So I caught us some scalps, just basically just trading it, using the 1 minute and the 5 minute, just trying to be, I wouldn't necessarily say a little bit aggressive, but making sure I just catch those moves where I think it's going to move, and then quickly take advantage of it, by putting in a limit. And that helped offset a part of the loss. Certainly didn't make up for it, but when you look at my point of saying on that is a couple of things I guess I could say on this that we even looked at from yesterday or from the prior day. Is one of the things that bothered me is that, and I just didn't catch that, was when we took that dip, I guess it was on Tuesday, I think it was, and we broke down here. This was really key here, this area, when the market had come back above and we came here and we held. That was pretty key. I thought a lot of people were going to get stuck here. I actually even caught a scalp short here. And I thought, but I don't think that's going to be it. I think they're going to push it higher. And they did. And I ended up coming in around here. And if it was going to fail, and that was a good area, the only thing that I do regret about that is, once again, you always want to let the technicals finish, is to let that bar, because with the close of this bar, that was such a solid close that it really opened the door for it to move even higher and then try and challenge it. Realistically, if you wanted to just come right into it, then come in here at this level, still would have come down, but I would come back into even. So, but the key thing I think was this area right here is when we broke lower for the day. Remember, this was a low. Remember, I talked about this extensively. If you look on here, I could try and expand it, but these were two hammer bottoms. So I said, hey, if it breaks that, and remember it rallied late in the day, and actually I was short at this point somewhere in here on the way down. We broke lower, and we continued to go on and press lower. So we ended up holding here, which was at the VWAP from 624, which was key to a certain extent, although I believe it was set up for a breakdown lower. But you can see here we rallied up here, still nothing to make anything hay of. We dipped back down, we rallied, and when we came back, this was key that it held. You can see right this area. So it had, almost like a little tweezer here. That opened the door for them to challenge. So even though I thought they may try and sell them off from here, but I thought they would go higher. Really, this type of movement here should have dictated, and on top of that, we had a buy signal, should have dictated a much higher move, at least to there, at the very least. And if you let the bar complete, I always say that you get a solid bar like that, that means you got to go much higher before you pull back. So really, if I was going to come in and say, I'm just taking my stand against a specific limit, it would have been right there. Okay, right there, I can say, okay, and then it still worked hard, but at least it came back to those levels. So if I'm adding on or whatever, would have been able to, even myself out. So from a technical standpoint, I thought that was key that held that area. And although, in a sense, I came in at a better position because it did fail at 11,000, or it came back, it started to fail, but then it came back in. I took a quick scalp. I said, that's not going to be the low. I meant the high, but really this market had more to move. And if I should have left this bar completed, saying, you know what, that's a strong bar, it's going to have to go much higher before it gives up the ghost. And certainly it did go on to do that. So with that being said, the reason I was pointing to that is if you look at it here on a 20-minute, there's nothing to dictate, I wouldn't say dictate, but to indicate, we might be running out of gas. No, it still looks like it might be a little bit tired, but no. But when you look at the individual equities, and I do want to get to that, and I will get to look at the Dow as Mark asked. It does look like we're rather stretched. And I want to go and show you, let's take a look. I did show this chart in the chat room towards the very end of the day. And I think it's key because even if you say, you know what, I don't even trade equities, I'm just trading FX, or I'm trading the dollar, I'm trading the euro. It's important because these equity markets are driving the FX. I mean, to a certain extent, the FX have been kind of dead, but it's important that you know what's happening here since they're driving the market. But look at this Apple, this daily chart. This is like, I want to say nuts, but look at this move. This is almost like an island on top of another island. But you can see here, this is also, you can look at this as a gravestone doji here. And if that's the case, we're really on the edge where this market could go on and pare back. Okay, that's just one stock, although it is the key stock as far as a volume percentage mover. Okay, so then let's go and get out of here. And that's why I thought it was important to have these dailies on there. We'll look across the board real quickly. Look at Amazon, this move here. We've made it up here, and it looks like the market's beginning to show a little bit, I wouldn't say it's tired, but we're starting to lose a little bit of momentum. I think the Apple stock is more of a telltale sign, but there's many others here. Let's go and pull this back on that. Let's take a look at Facebook. And this was a close from last Friday. Look at this right here. If the wick was longer, you could almost actually say it'd be a shooting star. But a shooting star, some people get these confused and will say something that's similar to a gravestone doji. Oh, that's a shooting star. No, it's not. Shooting stars, what do you think about a star? A star's way up in the clouds or way beyond the clouds. So usually the bar is going to be much higher, although this is pretty decent height, really. But lots of times people look at something that's like like the gravestone doji, go, oh, that's a shooting star. No, it's not. The wick has to be much longer because it's shooting out like a star, and then we come close lower. Although, like I said, this was pretty decent amount of stretch here, but nonetheless, this really opened the door for the market to move lower, and certainly did. But we've had other markets as with NASDAQ that they've been passing the ball around. And one of the things that Apple pushed it up to higher highs again was they're talking about coming up with bundling some of their services as a subscription service, and that gave it that extra boost. Maybe that was an extra boost to push us up higher. But once again, if you look at some of the other daily moves, Google tried to come back a little bit higher, but even look here at NVIDIA, this thing is very, very stretched. Now, Intel still sits pretty low, but another key one I wanted to go and point to, which is Netflix. Remember, we broke that trend line, and we still continue to remain below that trend line. So the real key driver here, although all these are very important, these are the top 8 here in the NASDAQ. Obviously, it's just the NASDAQ, but the NASDAQ's been leading for the most part, although S&P's moved higher, is we've really come to some areas that, wow, we're just so stretched that we may go on and start to turn lower. I don't know that that's necessarily going to happen today, although we do see the NASDAQ equity markets, the futures index under some pressure right now. Not a whole lot, but a little bit of a pullback. We'll get to that. You can see here, we looking here at the 5-minute, we took this dip, we pressed lower, came into good volume here, look, and here we are dipping again. So to me, it looks like we're getting at that part. I don't know if it's going to be today, or it's going to be Monday or Tuesday, but we're in that situation. We're close. One of the things that's also a note here is that on the relief talks in Washington, unemployment, extension of benefits, and so on, they're dead right now. The Senate has gone home. They're not coming back until September the 8th. So and another key factor was yesterday that the 30-year auction, it didn't go off so well. It wasn't a disaster, but it didn't go off very well at all. And actually, when those results came out, the equity futures took a dip, as well as the bonds taking a dip as far as prices. So we're really starting to get into a situation also with this deal. One of the things that they came in yesterday morning, supposedly the equities were moving higher, was, oh, there's talk, we're going to get the deal. The deal's going to come. Well, it didn't come after all. And now they've gone on recess, not returning back till September the 8th. I mean, September the 8th, today's August 14th. That's 3 weeks away. You see what I'm saying? So not that they couldn't get a deal before, but at some point, you lose the catalyst. Yesterday's extra juice catalyst was this whole thing about Apple announcing some kind of a subscription service. That gave it a little bit of extra juice. We kind of pushed higher, but we're starting to get to a point where and I think you could equate that to like the way the Aussie dollar is. It's still higher, but you're starting to see it spin tires, and we're trying to push up. We just keep finishing lower. We're not too far away that people are going to say, you know what, it's not worth it. Let me take my chips home with me. We may see a little bit to that today, but where the real move may come obviously, in the next few days. And the point is that we're so high that some of these moves could be very, very large. I think they could. We saw a little bit of taste of that on Tuesday. So we may go and see that. I think those are the bigger moves to come, and that'll certainly impact the dollar and other assets. Mark asked if we could go and take a look at the Dow Features. We'll take a look at that, which is a market I don't pay too much attention to anymore. Let me take a look here. Where are we on the Dow Features? Well, this is up in the sky here, and we're also starting to rotate a little bit lower. I mean, if you look at this, obviously this was pretty clear. But look, you see how we broke the trend line. But we haven't started to roll over yet. You can see here we just saw a dip here. We saw a return back here. If you're looking at key levels, Mark, coming right there. So 27,600 right now, but really any moves back, You certainly see the move there, but I guess right in there. So any moves, I would say back to 27,800. I think that the market's going to have a tough time trying to get back above that. But you can see this key range right in here and here. The downside is 27,600 right here. But I think that if you look at this, we're starting to lose some steam. And now whether you, and really it's not a matter of calling a top. I'm talking this, whether it's going to be S&Ps or NASDAQ or whatever. The point being is that when we do go on slip, we're not saying, oh, this is the top and we're going to go down here. Look, we don't even have to go that far back. I mean, this is August the 2nd. I mean, look way down here just from even June. We're not even talking back in March. So just here to get a correction, just a mild correction is going to take us down here to 27,250. So you can imagine that's a pretty decent little move there. And that's what I'm saying is I think we're, so I hope that helps. 27,600, 27,800. Beyond that on a break, you'd be looking right here, which is going to be just looks like below 27,400. Right there. I'd be like about 27,390 right there. But you can see right here on the break, lower here, you're not even trying to call the top or anything. Just this move is going to be pretty huge. And we've had such a phenomenal run. Let me put this on a 2-hour. You can see here, if we do go and pull back, and obviously there's some key support right in here. Let's take a look here. Right there. So that's going to be pretty key there. Let's go and highlight that, make it a little that line thicker. Yeah. So just they'll probably take out 400 just a little bit and come down here, but there's going to be some pretty good solid support. But that's what they would aim for. But my point being is that as people, if we do start to see this break, and you're starting to see one of the concerns, and we'll go back here. Once again, you're looking at 600 to 800, and if we do break, that's going to be some pretty good solid support coming into 400. This line right here is just probably like 425. But they'll always overtake that, overshoot it on the stops. But to get back, I think let's go back to the main screen and we'll get to that. I think we had it closer. I think we had it on a 4-hour chart, actually. Yeah, we did. So you can see we've broken lower. At the time, I think we'd broken down here, and this is on the 4-hour chart. Still have can go a ways further. But we broke low, which means interest rates moved higher. We've already broken below this area of support, which is 39. I guess it's going to be about 39.12, 39.13. But the point being is that now interest rates are starting to move higher, and the equity markets did go and move lower at the same time that bonds moved higher yesterday on the break on the disappointment of the 30-year auction. But once again, with nothing in sight as far as these stimulus talks that are going to come about, at some point someone's going to say, the market's having a tough time starting to move even higher, although we did move higher on the equities and NASDAQ and SPOOs, although we had that catalyst because Apple's the number one mover in NASDAQ. So we had that news, and that drove the Apple to all-time highs. But once again, now we kind of paired back. We're going to have to see. It doesn't mean it turns around and goes south today. We'll probably see some slips. We're seeing it right now. But once again, if we do start to go inside, and there's no catalyst as far as a stimulus plan coming down the pike and interest rates are gently starting to move higher now, then you're going to have some people going to say, I'm going to take my marbles and I'll go home. And with that, we could end up seeing this slip. This slip could start to maybe gain some volume. So we'll see what happens. Let me go back. Okay, and Marsha just said thanks. So let's go on and we'll take a look at the economic data coming up. So we do have GDP flash at the top of the hour for Eurozone. Okay, they're looking for minus 12.1%. We're looking at for the preliminary productivity, and well, this will be key retail sales. That'll be at 8:30 Eastern today. Here for the States, and then Canadian manufacturing sales, that'll be at 8:30 Eastern. And then we do have industrial production and capacity utilization at 9:15, and at 10 a.m., we do have a fresh read on University of Michigan. That probably will be key. So we'll see. So quite a bit of data coming in with productivity, but more importantly, it's going to be retail sales, and then also Canadian manufacturing. We'll have industrial output capacity utilization at 9:15, and of course, first read on University of Michigan. So those we'll get some pretty decent little moves as we come in today. Let's go move this out of the way and we'll cover the news. I just thought it was key that I cover those other markets or cover these other ones, other assets, just to give us kind of like a more full or whole look. Because like I said, right now, I know it's frustrating for many FX traders too, because they're saying, wow, it's just dead. Not in the cross rates, but many of the majors. But once again, like I said, I think we're at the precipice of something happening, but I'm not necessarily it's going to happen today, but it may be happening as early as the early part of next week. When you take in consideration everything that's going on, we are seeing interest rates starting to move higher. There's nothing that's going to be done at this point now with stimulus. Doesn't mean it won't come all the way until September the 8th, but chances are any deal probably isn't going to come for about another week or so. And then that leaves people saying, well, what's going to happen now? I mean, we already come so far. I've got a lot of good money in my pocket. I think I'm going to take some of these chips home. Doesn't mean to get completely out. The point is, we'll probably hit some stops as we start to move lower, and those stops will probably be people's stops to exit out their long positions. Not that they're getting short, but we've had such a big move up that the move down, just from I don't want to say a percentage point, but for the extent that we've come, that it can move and seem like an even bigger move, even though, like I said, just simple profit taking will provide a decent little correction. And I'm talking profit taking where stops are hit. So that being said, let's just go and cover the news real quickly. Australia and New Zealand dollars run into resistance on U.S. yields jump. We just talked about that. The Australian New Zealand dollars were set to end the week on a flat note on Friday as a sharp rise in Treasury yields steadied their U.S. counterpart after a run of losses. The Aussie, and now that's another thing that's going to be helpful or that's very supportive for dollar yen. We know that with when you get a higher U.S. yield, something we haven't had to deal with in quite some time. The Aussie was stuck at 71.42 after again running into resistance of 71.90. We talked about that. It goes up there and then we slide right back down, starting to lose its upside momentum, leaving it short of the recent 18-month top of 72.42. The Kiwi dollar also eased back to 65.32, having lost almost 1% on the week so far and touched a one-month trough at 65.24. That was some way from the recent 8-month peak of 67.16. The Kiwi rally was partly undone by the Federal Reserve Bank of New Zealand's, which went out of its way this week to sound dovish on policy. On one of the top officials studying the central bank was determined to drive yields to drag the currency down. The RBNZ has made the case for further easing, said Prashant Nirwana. While we believe that funding for a lending program would make more sense, negative rates in New Zealand cannot be ruled out as an outside chance anymore. Wow, who would have ever thought you'd heard that? Negative rates associated with the Kiwi. As a result, the New Zealand 10-year yields were off 10 basis points for the week at 69.69%, bucking a 14 basis point increase in U.S. yields. In contrast, the Aussie 10-year yields followed the Treasury higher and rose 10 basis points on the week to 93.93% as the RBA ruled out further easing in the near term. Speaking on Friday, Governor Philip Lowe said monetary policy had done what it could and it was up to the fiscal policy to support the economy, urging the government to borrow much as needed to fund more spending. And on to the dollar. The dollar stayed on Friday as a jump in U.S. bond yields and a drag on sentiment from lackluster Chinese economic data put the brakes on a sell down of the world's reserve currency. China's retail sales unexpectedly extended their fall into a seventh month in July, and industrial output missed expectations, suggesting bumps in even the world's most promising rebound. The mood had the dollar within reach of snapping a 7-week losing streak against a risk-sensitive Aussie, which had settled around 71.49. Tepid demand in a long-dated U.S. government bond auction on Thursday also extended a surge in Treasury yields that has drawn some investors, especially from Japan, back to dollars. We talked about that. How the dollar yen reacts favorably for the higher moves in yields. The biggest loser has been the New Zealand dollar, which was pressured at 65.38 as the country faced a fresh coronavirus outbreak, and after the central bank this week flagged increased bond yield buying and again mentioned the prospect of negative rates. Risk sentiment is slowing down, said Westpac FX analyst Emily Spitzer. It's too early to say the whole dollar trend is over, but it's got potential. At the very least, it's putting a cap on the Aussie and the Kiwi. Troubling signs also emerged on the health front in Asia, with 29 new cases in previously virus-free New Zealand, prompting an extension of Auckland's lockdown and the biggest daily jump in South Korea. Preliminary European employment and GDP numbers are due out at 9 GMT, and U.S. retail sales due at 12:30 GMT are the next set of data for investors to parse for signs of divergence between U.S. and European recoveries. Gathering the faith in Europe's rebound and doubts in the U.S. as the virus spreads and politicians remain deadlocked over the next relief package have kept the euro firm, even as the dollar has been able to bounce a bit elsewhere. A fall last week in the number of applications for unemployment benefits in the U.S. to below 1 million was welcome or surprise, but with some 30 million out of work and stimulus plans stalled, the outlook remains grim. The euro hung on to 18.16 in the Asian session on Friday, and the pound was steady at 30.62 as investors sought to focus on a rebounding growth in June rather than the diabolical quarterly contraction. So with that, we're just going to move into the analysis. We'll take a look here. We'll start with the euro. So the euro pressed ahead of the bias chart resistance level of 1845 on Thursday, pushing buy stops and before paring back. Bias chart resistance on Friday will be 1881 with support at 1751. Now, the euro is trading relatively quiet right now, but we're opening the door for we could press up higher in here, which would be 1881. We may dance around that area and then before trying to move higher, but the real resistance would come in at 1881. And I say dance around between where we are now up to 1845. Support's going to be 1751. And let's go move into the cable. So cable made yet another push above 3,100 within a tight range before paring back. Key resistance will be 3,152 for a possible breakout. Support remains 2,956. So we're really dead in the water. Holy smokes. It is truly the dark days of summer. And 2,956 remains. On to the Aussie dollar. The Aussie remained in a tight range, although it did form a gravestone doji. Here's on Thursday. The pair appears to be losing upside momentum. Immediate support will be 70.65 with a potential move to 69.75. Upside resistance will be 72.04. And onto the Kiwi. So the Kiwi closed lower on Thursday after posting a hammer on Wednesday. The correction appears to be set, and support on Friday will be 64.75 with resistance at 66.01. Onto the dollar CAD. The dollar CAD broke to new lows on Tuesday, and it opened that range for lower price down here. We talked about the 132. Really, no changes here that I'm seeing here. We did go on and make it down here. Let's go back. So it's still going to remain 32, and on the upside, 32.95. No changes here for the dollar CAD. And on we go to the dollar peso. So the peso stayed in the tire rut, and that is incorrect. This is it because really, and I don't know why I didn't update it, because it said the analysis was that it broke to 22.20, opening the door potentially to 21.92. And I remember that the support was 22.02 with resistance at 22.38. That's frustrating. Really pisses me off that it didn't save that. But I just remember that my analysis was it closed below 22.20. Potentially, we could move to 21.92, and the first support and support by chart to support today is going to be 22.02, and resistance would be 22.38. Onto the dollar yen. So the dollar yen tested a bit lower on Thursday, but recovered as U.S. 30-year Treasury auction was a disappointment, with yields moving higher. Buy chart resistance will be 729, with support at 647. Now we're still, you know, hanging around this on the upside of 702, but the next level would be 729. So whether we see that today or in the next couple of days, that's really going to be the key resistance. And really with the way we've been holding up, the 646, 647 you see here was the breakout level. That's going to be support. And this will still remain the same at 729. Let's go move into the cash dollar index. So the dollar index held the test of the bias chart support at 92.89. Resistance on Friday will be 93.70 in case we were to get that push higher. With support remain at 92.89. So I don't know why this didn't update. This really upsets me because we had 92.89. I don't know why that didn't. That was the area that we were looking for this to potentially break lower. So I don't know why that didn't update from before. I think we did keep the 93.17, although we said that the potential was for 92.89. So I guess that was correct that it kept that, or that we had that. We knew that there was a potential for it to get to 92.89. I think we were looking for it to hold, and that's why we kept it at 17 yesterday. On to the cross rates. We had 69.41 and no changes there. That still remains the same, and we're still in a tight range. So 70.43, no changes here. We'll move on to the euro yen, which we've seen pretty good movement there. Obviously, it must have moved higher yesterday, which it did. And we had 26.63 as a resistance. It popped just a little bit above 26.63. It made it to 26.79, but it's still going to remain the same. 26.63 and the downside 25.52. So this will remain the same in the euro yen. We'll move on to the euro odd. We had the upside for 65.39. That's going to still remain the same on that euro at 65.39. The high so far today is 65.45. We're going to keep that there. And with the low at 64.30, that will remain the same. So no changes there. And on to the euro Kiwi. On the euro Kiwi, we had 80.36. We did push above that. Here's that 80.36 area. We've even pushed beyond that. Really about the euro, whether we can push even higher. Let's take a look at the support, which we had for 79.16. I still like that, but the upside, let's see if there's anything. I doubt there is on a 2-hour chart. Right there, 80.98. It'd be, well, it's actually 81.01. But before that, we've got 80.70 and then 81. Yeah, we almost made it there. So it's going to be 81 even. And on to the ASEAN. $76.71, I still like that. $76.19. We're working a little bit lower, so let's take a look here on a 2-hour chart. If we break lower, you would think it'll press further than that, but right here, 75.93. Onto the guppy. That's going to still stay the same, this 40.22. On the downside, we had 38.72. Same thing here, because we're still relatively quiet, even with this pair, with summer trading. And lastly, sterling odd. On the upside, we had 83.36. That's going to still remain the same. And 82.84. We did take a little bit further dip, and you can see right there, even Steven down here at 82.22. If we're able to push a little bit higher, that's where the resistance comes at 83.36. So that's going to do it here for the bias chart. We'll take a quick look here on Eurodollar. Still staying relatively quiet, but the real resistance here is going to come in at 1881. We're a ways away from that, but once again, that's where the resistance would come in if we're going to make this push higher. And that'll leave it at that. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.